And Wednesday was a pretty quiet day until it wasn't. MBS were down 14 basis points on the open, while stocks gained about 9 points. After yesterday's Royal Bank of Australia surprise rate hike, the Bank of Canada is out with copycat performance, including a more ominous warning about the nature of inflation. All of the above has some traders questioning the certainty of a skip from the Fed next week. It's also putting upward pressure on bonds, particularly the shorter-term yields. With the debt ceiling deal in place, the Treasury is poised to issue more than $1 trillion in short-term debt to keep the lights on. This will push short-term rates, at least in the near term, which won't be supportive of mortgage rates. MBS spreads continue to hang out at the highest levels since the Reagan administration. Another headache for the mortgage industry is that all cash buyers are the highest since 2014, coming in at 33%, which is weird because I've seen recent reports that investors are down. So you would think that a lot of times all cash would be that, but I guess people are selling their houses, getting enough money, and buying smaller houses. With higher rates and home prices, more borrowers are opting for FHA loans as well. FHA loans are back to pre-pandemic levels, while jumbo loans are declining. Reprice risk on the day seemed low, with no Fed speakers or economic data to talk about it. And then we got all that stuff from Bank of Canada and Royal Bank of Australia, and the U.S. traders are pretty sure they have the Fed figured out after two separate Fed speakers used the word skip in speeches last week. Until we get all that stuff from the foreign banks today, there is a low chance of a rate hike next week and a high chance that rates remain high through 2023. So everything is reacting to the notion that we are not going to get rate cuts in 2023. Today's Bank of Canada announcement caused a bit of a rethink as to how sure we are about the skip next week, and added fuel to the fire of higher for longer when it comes to the forward outlook. Rates shot higher right after the announcement, and we never saw much of a recovery. At the end of the day, we were down 30 basis points on the MBS, stocks lost 16, and the Treasury was up 10 basis points. At the end of the day, we ended up at 99.69, which puts us in this bottom range between the thick red Fibonacci level at 99.845 and then our new floor down at 99.125. Definitely seems like there's a feeling that we might hold that range, though. We also got news that Sprout is going to pay some of their employees. Pay up might be a little bit of an overstatement in the headline. Former Sprout employees who went unpaid when the lender abruptly closed in July 2022 will receive $2,500 from a settlement the company agreed to in federal court. I guess $2,500 is better than nothing unless you're my friend that was owed $70,000.